All right. Good morning, everyone. Happy Wednesday, the 26th of March. 'Tis almost April. All right. Good morning, Lorna. Good morning, Peter. All right, guys. So looking at the action here, they get the big breakdown, the big walk lower. You put in the short-term bottom. You get the initial pop higher. And now I think the big question is, where do we go from here? And I think it's a tricky little spot right now. For one thing, you have your end of month, end of quarter rebalancing, the window dressing, all the above. So that can be a little tricky. And then, maybe a bit more importantly, if you look at the rankings here on the spreadsheet, no doubt, compared to 1, 2, 3, 4 weeks ago, we are getting better scores, but things are just neutral. QQQ has 11 points out of 120. S&Ps have 10 points out of 120. So right now, take your indexes, take your Big Ten names, take your sectors. We're only at about 9% of max strength. Really neutral. What can be really tough in a neutral market is that swing trade game. So for myself and for the trades I've taken here in the room, still keeping that shorter term focus, mainly looking for, day trades or things will hold maybe for a couple of days. So you've got the quarter end shenanigans, you got a neutral market, and then just looking at the QQQ. Weird little spot here above the 21 EMA and below your 200 SMA. So I don't think there's going to be a life-changing move on the QQQ below 495 and above that 490. So I'm trying to figure out, is it a situation where they flush the market, you get the initial pop, then on your first pullback, everything falls apart again. Qs are back into 490, 485, 480, all the above. Or is it a case where you flush the market, put in that bottom, we get through that 21 EMA, get through that 200 SMA, and then maybe try to open the door for a bit more upside. I think trying to call for either or could be a little tricky under that 495 and above that 490. So patience on the QQQ. Pre-market, the NQ is flat. S&Ps are S&P futures flat, QQQ futures flat, Bitcoin flat. You got silver up a bit. But yeah, be patient on QQQ and be patient on your tech names. For example, you go here at the open and you buy a bunch of Apple calls, and then lo and behold, the QQQ just right back under 490, walking all the way back down. Not a great time to be long QQQ, not a great time to be long Apple. Probably not a great time to be long too many things. What I would say is they can at least hold it above that 490. Take that spreadsheet, and for a short-term trade, go looking for a few spots of relative strength. Not looking for week after week of strength, not looking for some kind of giant multi-day move. Great example right now is Netflix, which I am ashamed to say I miss Netflix. But a few things came together for a push from 960 up into that $1,000 call wall. Let me get my notepad here. All right, so Netflix. All right, first thing you had there was relative strength on the big three sheet. So on Friday, then into Monday, compared to the indexes, compared to the other Big Ten names, compared to most sectors, Netflix had a really good score on the spreadsheet. So you had relative strength, and then number two, right, trading above the daily 21 EMA. Right, you're above that daily buy zone. Again, compared to in Apple, compared to most things out there, not too many things are above their 21. So it's relative strength above your 21 EMA. Third thing coming together here was lower time frame squeezes and lower time frame buy signals. All right, now if you can find all of that, relative strength above your 21 EMA, lower time frame squeezes, lower time frame buy signals. The real cherry on top could be if you are, we'll call it close to a major level / target. So relative strength above your daily 21 EMA, lower time frame squeezes, lower time frame buy signals. And then in the case of Netflix here, down around that 950, 960, you're about in average true range move away from that big $1,000 level. It's big, sexy round number, big psychological level. And if y'all follow the call wall and the put wall levels here from Spot Gamma, it's also been your call wall. So your relative strength name prints a bunch of buy signals above the buy zone, and that kicks off a push towards that magnetic level. Now, again, I didn't catch the Netflix trade, but I'm looking for things like Netflix. When will I no longer look for that kind of trade? Probably if QQQ is breaking back under 490. I don't want to be long tech. I don't really want to be long anything for a swing trade if we're working back down towards 485, 480. Keep it above that 490, then I'll look for some relative strength. All right, so spreadsheet says on the Big Ten, it would be Netflix and Meta. And I think as far as the easy part of the move, Netflix has probably made it. Now, could they get through $1,000 and push into 10, 10, 10, 15, 10, 20? They'll do whatever they want to do, but I think that was your easy push. From that daily buy zone, you had a really, really nice 15-minute squeeze. Right, that bad boy got the move going for you. From that 960, 965 towards that $1,000 call wall. All right, but then as far as the meta goes, call wall for meta would be, and again, these come from Spot Gamma. So if you're not too familiar with Spot Gamma, definitely something I would take a look at. A call wall at 700. All right, so with meta trading 625-ish, I don't think you jump in and take a short-term trade calling for a move into 700. Would be pretty damn cool if they could do that. But you may be looking for a move into 650-ish. Right, one average true range move higher from a 21 EMA back into a 50 SMA. So it's pretty good relative strength. Aside from Netflix, it's better than every other Big Ten name. It has a better score than every index, and then a better score than every sector except communications, financials, gold, energy, and silver. So not too shabby. All right, now from there we have to have a level to anchor to, an over-under, and we're going to do that 21 EMA off of the daily chart. Call that 622, 623. All right, now if they can keep it above that green line, where do I want to jump in and buy it? Ideally, something like that Netflix 15-minute squeeze. And it could be a 5-minute squeeze, could be a 15-minute, 30-minute hourly. You take it where you can get it. But that combination of you're building up the energy, the compression from the squeeze, and then your structure is bullish, your trend is bullish, momentum is bullish, perfect score of 15. Not a guarantee, of course, but the odds would favor. They take that compression, try to kick off a move towards higher prices. So if we can get a carbon copy of that anywhere in Meta, maybe not for this Friday's expiration. It is Wednesday, but maybe looking for something out into next week for a push into 645, 650. And again, from an average true range perspective, that's Meta putting on its big boy pants for one day and just making one average true range move. Right, not calling for a push to all-time highs, not calling for week after week of strength. Get it back above that 21 EMA, keep it back above that 21. Give me a bullish 5-minute, 15-minute, 30-minute squeeze. I'm just trying to catch a pop. So Netflix has made the move. We'll keep an eye here on Meta. And then what about Tesla, Amazon, and a few more here? Much better action for the Tesla bulls this week. Maybe not today, maybe not this week. At some point, I think the key here for Tesla is going to be how can it handle a good pullback to a 30-minute hourly 21 EMA? I would say for the most part, this is very much a short squeeze move initially. All right, tear the thing down, rope in a few shorts, and then off goes Tesla. That can make for a fun, exciting move, but now we got to figure out, can Tesla actually trend higher? Not squeeze the shorts every day, but can Tesla actually trend higher? Now, you're buying pullbacks, you're buying 15-minute squeezes, 30-minute squeezes. We'll figure out if it can trend higher on that first hourly pullback. All right, big ass push, first pullback, and you find support. You hold structure, you get 5-minute buy signals, 15-minute buy signals. That might be the push, the kickback, and then the turn higher. First pullback to an hourly 21, everything just fails. All right, they're breaking the 21 EMA, they're breaking the 50, you're getting a bunch of sell signals. Might not be ready for a short-term trend higher. So fun to watch for now, but no trade for me at the moment. And then I'm looking for a spot to buy Nvidia, but it's a little finicky here. You get a couple closes back above your 21, but then looking at it at the close yesterday, it's just really, really neutral from the ground up. We don't have a 1-hour buy or a sell signal. We don't have a 30-minute buy or a sell. And then looking like an open around 118.85. So using Netflix as a visual template, I want to buy Nvidia if Nvidia can look more like a Netflix. Firmly above that 21 EMA, 30-minute, 15-minute squeeze, 30-minute, 15-minute buy signal. 124, 125, I don't think it'd be a crazy target. It's just an average true range move. Definitely a good pop in Netflix yesterday, but again, it was just an average true range move. So patience with Nvidia. Below 120, I think I got to can that idea here in the short term. And then Microsoft. Little better here in the short term. When you're under your 21 EMA with a daily sell signal, tough to want to buy it even on a 5-minute, 15-minute. Now you're getting that momentum shift. You are back above your 21. So now the key would be with a call wall up here at 400. Could we find a spot to buy it on? Again, take it where we can get it. Could be a really good 5-minute squeeze. Could be a really good 15-minute, 30-minute squeeze. And then from 395 and the 400 is about in average true range move. Nothing too crazy. Not you don't need day after day, week after week of continuation. From that 21, pop it towards that Keltner channel. If you catch that on a call with 5, even 10 days till expiration, good bang for your buck. And looking like an open around 395.50 here for Microsoft. From Microsoft, you can jump to the Zon. And again, a little better here on the short term. They cancel the sell signal. You're back above the 200 SMA, back above the 21 EMA. And now, where's the wall of the call? Amazon call wall at 210. All right, so from 205 to 210 is not an outrageous ask. 15-minute and a 5-minute squeeze. So if they can turn this 15-minute squeeze into that 15-minute squeeze, meaning just print the white arrow down here, that could be a pretty solid spot there. But again, here's what makes it all, I think, a little trickier. I'd like to buy Nvidia. I would like to buy some Meta. I'd like to buy some Amazon, Microsoft, all the above. And then I've got a QQQ just in a weird spot here on the daily chart. Above that 495, I think you want to be long Amazon's, Nvidia's, etc. Get through 495, get through that 200 SMA. Bulls might have room for a little bit more. If we can't get through 495, today, tomorrow, later in the week, in the short term, that might be all she wrote here as far as a pop. Break 490, maybe things pull back a bit. So above 495, I think it's easier to jump out there and take longs. And then below 490, I think it's easier to look for shorts. Between the two could be a spot of patience. And then aside from that, we got some Bitcoin futures under our belt right now. But a few contracts here yesterday. And we're working about a 1 to 2 risk reward. We've got our exit down here around 86,500. So if they pull it back a bit and they break that 21 EMA, we'll get stopped out. And then we have our target around the 90K. Just kind of chopping here with the indexes. Nice 15-minute squeeze yesterday. That got the initial push going. Another 15-minute squeeze. That turned short. Choppy, choppy, choppy. But a good example, I think, of the kind of trade you want to look for in this market. All right, I'm not buying Bitcoin calling for a move back into 100,000. I'm not buying it calling for a move back into an all-time high. It's less than a daily average true range. I'll risk $100 per contract to make about $200 per contract, and if I'm wrong, I'm not going to lose my shirt. We'll eventually get back to more of a go for the kill market. Looking for the base hits for now. But all right, y'all. Any questions for me? Anything you want to take a look at? Any chart requests? All the above. Get them in the chat for me, and I'll get caught up. Just a patience game here this morning. Look at all the squeezes. Hourly on the S&P futures, QQQ futures, the RUT, the YM, the gold futures, silver futures, and Bitcoin. 2-hour squeeze on ES, RTY, YM, gold, and Bitcoin. Silver has a really good looking weekly 3-day, 2-day squeeze. And then cash markets, decashola, 30-minute IWM, 30-minute Dow, 15-minute QQQ, 30-minute 15-minute IWM, 15-minute Big 3, and then for the Big 10 names, 15-minute Amazon, Apple, Netflix, Nvidia, Microsoft, TSM, and Google. So if they can all turn into the Netflix 15-minute squeeze, and while they're doing that, the QQQ is getting through 495. I think you have a lot of nice opportunities trying to line up here. But we shall see. We shall see. You're my morning news to the market. I appreciate that. Good morning, Terry. What's up, my friend? All right, and then we got AT&T, GME, and Shell. Awesome. All right, we'll do AT&T first. Which I think I saw somewhere on the maybe Dow Jones rankings. Where were you, AT&T? Yeah, so on the S&P 100 names, AT&T had a 113 out of 120. Really, really good score. All right, now what do we do with that good score? Just change this up real quick. So this can make for a really it can be a tough dynamic where you got that daily squeeze setting up. You have really good trend and really good structure. But if you want to jump in and call for a move higher, right now you're lacking momentum. We got that MACD line below zero. So let me show you a few examples here. One would be the daily squeeze you had in DocuSign. Excuse me. So back here, very much like AT&T, here's DocuSign in a daily squeeze. Really good trend, really good structure, but you were lacking momentum. They never got that momentum shift back above zero, and they try to pop it, try to pop it, try to pop it. The squeeze says, hey, I've got to fire eventually. All right, I'm building up all the energy. I have to fire at some point. And they try to break it long, try to break it long, can't get the job done. This is what we're coming to learn more and more, a pretty typical pattern. Visually, it's like a big mirage. Right? Well, it looks bullish, it feels bullish, it smells bullish. It's a really good looking daily squeeze in a big uptrend, and you've got the stacked EMAs, all the above. If you can't get momentum, right, they'll pop it, rope in a few bulls, and then turn the corner, take out the low, and break that squeeze short. Another example would be the Bitcoin futures. Come on back now. Here we go. Right, big daily squeeze. And pretty much from the get-go, you got momentum trading below zero. You had really good trend, you had really good structure, but you're lacking that momentum. So they push it in, they push it in, and they pull it back. They go for another breakout attempt. They try again, try again, try again. They never get that momentum shift. And then the squeeze says, all right, to heck with it. I'm going to go ahead and break down and fire short. One more for you would be the SMH weekly chart. Really good trend, really good structure, really big squeeze. You haven't had bull momentum since July of 2024. So there's such a huge difference between the current weekly squeeze, lacking bull momentum, and then the weekly squeeze you had from back here. You had a good trend, you had good structure, you had the 21 above the 50, stacked EMAs, all the above. But then you finally got that white arrow. You got that white arrow because you finally got momentum. All right, now everything lines up. Trend says let's go higher. Good structure, good momentum. Never a guarantee, never a promise. That's just the nature of trading. But at that point in time, you should, with confidence, be able to call for a move higher. And in my room, when we do nothing but that, we've got about like a 75% win rate over the last 65 to 70 trades. Then when we get a little too cute and we're back here buying calls on the SMH, right, without the white arrow, that trade does not work. That'll be a max loss in about 3 or 4 weeks. When we bought calls back there on DocuSign, you're front running momentum. All right, I know we don't have it just yet. I know it's not an A plus setup. It's more of a maybe more of a B plus setup. But I'm gonna jump in. I'm gonna front run momentum, and it'll all work in my favor. When it does, it's awesome. You jump in early, catch it early, catch the bulk of the move. But from a consistency standpoint, our best bet is almost always wait for that momentum shift. Another example back here. Pulls back into a daily squeeze. You lose momentum, and you're chopping, you're chopping, you're chopping. Squeeze eventually just goes and breaks short. Now that's more of a swing trade conversation. If I'm going to take that daily squeeze, jump in and buy 30 to 40 day till expiration calls, everything's got to line up off that daily. But if I go down to, say, a 5-minute squeeze, and not a good example right now, of course, but if the 5-minute chart had trend, structure, momentum, I can jump in, look for a day trade move, and then wait for that daily chart to get a little bit more aligned. So a long-winded breakdown of AT&T, and then GME. Oh, you were just trying to at me. Okay. My bad. Good conversation about momentum nonetheless. And then GameStop. My best piece of advice with a name like a GameStop, which can get wild, get crazy, all the above. Just approach it with proper position sizing. You can grab calls, hold it overnight, and they can gap it up 5, 10, 15, 20, 30, 40%. You can buy calls, hold them overnight, and it could also do the opposite. But in terms of execution, I would treat it like any other name. I'm not going to chase the entries. I'm not going to force the issue. Can I buy it on a pullback to a 21 EMA? Can I buy it on a fresh 15-minute, 30-minute squeeze? But then on the name like a GME, maybe one thing to keep in mind. I haven't checked, but I imagine it's the case. You got really, really jacked up implied volatility. A lot to be said for being a seller of an option, not a buyer of an option. So I might favor doing a put credit spread over buying an in-the-money call. Buy the call, catch a decent pop. Given the IV, you might not even make any cash. Sell those jacked up put contracts. GME goes nowhere. You're going to pull in some profit. So I would do things like put credit spreads, butterflies, or we're getting wild and we're doing the out the money calls. Just a matter of the sizing. But looking like a gap into about casual gap into about $28 and change. Not what I would call a good-looking weekly squeeze, but there is a weekly squeeze behind it. All right, and then Shell. Really good-looking daily chart. What we got to figure out from here is, has it already made the easy move? You got your daily squeeze, you push off your 21 EMA, you work towards that third ATR target. And in most cases, that will be the easy part of that move. But for conversation's sake, they might want to take it from 72 into 74, 75, 76. If that is the case, not every 5-minute, 15-minute squeeze will fire long. But from the current price, if you have a direct path into 74, 75, 76, most of them should fire long. So what I like about that is, all right, we're a little bit too far above that daily 21 to want to jump in and take a really big swing position. But I could go down to my 15-minute time frame, wait for a buy trigger on the 15-minute, and then just day trade it or short-term trade it. The risk of getting swing long up here is you wake up the following morning and you're pulling back to the 21 EMA down around $69. Well, I can buy it above a 15-minute 21 and close it below a 15-minute 21 and really keep my risk, nice and contained. So yeah, up here at that extension, I have more of a shorter term, lower time frame squeeze focus. And then, hey, it's a good looking daily chart. You have trend, structure, all the above. Good flush into that 70, 69 can make for a decent buying opportunity. And then BMY is up next. And I think BMY is a good example of just the frustration I think you're going to have trying to swing trade this market. And again, I can only speak for the things that I look at, the things that I watch, but I'm seeing so many of McDonald's. Like, oh boy, here we go, big old daily squeeze, bunch of buy signals, big push, and then down goes Ronald. There was paychecks. And these are the kinds of things I make the most money on in the right market. It's my favorite trade ever. Daily squeeze in an uptrend. All right, here comes paychecks, all the white arrows, etc., and then right back down. What about Alibaba? White arrow, daily squeeze, push, 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 and then right back down. Um, plenty more examples to go around, but looking at BMY, and there might have been news, might have been something specific to BMY. But from my perch, I think a good example of the difficulty trying to swing trade this market. The things on bigger time frames that should fire and make really nice moves, they're just not doing it. They flirt with the idea of doing it. They give you the initial pop and then right back down. So how can I combat against that? Day trade BMY. In the fact you have a really good daily squeeze behind you, it's only a bonus point. I'm thinking, hey, I want to go and swing trade a BMY when the sheet is no longer neutral. Right, where we're trying to gauge edge. Who's got the most edge right now? Is it bulls or is it bears? And if one side's got the edge, how much do they have? Well, all right, technically the bulls have got the edge, but it really ain't all that much. Right? The indexes are at 6% max strength. So imagine imagine you've got an electric car. You jump in it, you start it up, and you've got 6% of your max battery. Like you're not going to go too far. So these are not road trip conditions, if that makes sense. All right, and then a couple more here, guys. Palo Alto. Just checking out these futures. All right, PANW. My general advice for everything is going to be try to day trade it. And that has much more to do with the market than a Palo Alto or any other individual stock. So I'd be looking at 5-minute time frames, 15-minute, 30-minute hourly. And again, maybe Palo Alto goes from 190 all the way into 210. Unless I do that in just some crazy straight line. If you've got that 5-minute, 15-minute, 30-minute squeeze focus, you're gonna find your spots along the way. Don't get me wrong. My preference is all right. I'm in a good market. I'm going to buy Palo Alto down here. I'm going to give that trade maybe 30, 40 days till expiration, and I'm going to swing trade the push from 190 into 210. Less management, less. It's just easier, but in a different market than the one we have now. Oh yeah, Art. My bracket got crushed on day one. Yeah, I had a short-lived bracket this year. I had Louisville taking Creighton, so that bracket was busted upon arrival. But all right, my good friends, I'm going to let you go here. Cash markets open up in about 9 minutes. So, folks in my room, I'm going to go heat up the coffee, and then I'll see you over there. And for the rest of you, thank you as always. Always appreciate your time. Have a great Wednesday. Have a great rest of your week, and I'll talk to you all soon. Adios.